That group of bank stocks absolutely rallying today. Many of those names outperforming the broader equity trade, even that we're seeing as markets are higher across the board. As a whole, a very strong quarter for the banks?
Absolutely. I would say that this is their second most profitable year, 2024. And that's compared to 2021, which is the most profitable. So we're ending on a high note. And what's also interesting is the commentary around the year ahead. There's just so much positive momentum that the executives were referencing on the earnings calls today. So not only is it a look back and kind of a nice bow on 2024, but it's a lot of full steam ahead. We're expecting more deals. We're expecting a lot more volatility in the markets. And if 2025 can look, it's going to be tough, but 2024 was certainly a positive end.
Were there any common narratives? I mean, every bank is a little bit different, right? In terms of exposure and so on and so forth. Was it volatility in trading? Like, was there any kind of common themes that you could kind of string across all of them?
So with trading, the volatility, it has to do with both the rate cuts. So there was a lot of repositioning. There was a lot of repositioning also around the U.S. election. So those two things really benefited the fourth quarter, the last 3 months of the year. Then when you look at investment banking, deals are coming back in a more meaningful way. But this is compared to a pretty muted 2023. So I wouldn't say that this is the floodgates have opened and we've seen a significant, when you compare it to, let's say, 2021 or 2022, when there really was a peak in deal activity. But there's momentum, and that was the common narrative across the board.
Okay, one more on momentum, and then we're going to get into the particulars of some of the banks, because we got quite a few results earlier today, Kat. Momentum, is it as a result of optimism over regulatory changes? What's the momentum? What's the optimism coming from?
I would say that was the phrase that was repeated the most this morning, was that there is an expected easing of regulatory burdens that these bank executives have been complaining about for years.
For example?
So the capital rules, the capital requirements that they were anticipating having to put aside more money to abide by those capital rules. Now the expectation is those rules will not be as stringent.
And yet they've done okay, if not.
Yeah, I was going to say they've survived.
Better than okay.
And they've always said that they're in an okay position. There was never a question of whether or not they were going to be able to abide by higher capital rules. It's just that when you have the higher capital rules, there's less that they can do. There's less wiggle room.
But they've done well.
And they've done quite well.
Really well.
But they haven't also faced, these capital rules are meant to be in the times of highest stress. So I wouldn't say there were times of stress. You had the regional banking crisis. We've had a lot of geopolitical tensions. So there's been a lot of volatility, and the banks have held up. But I don't think that we've reached, let's say, the highest point of stress that these stress tests are really, they're preparing these banks for.
Okay, but remind everyone why those capital requirements are in place. I mean, like you said, during times of stress, they need to make sure that these banks remain operable.
We're waiting for all the emails to come in and say, well, remember when we bailed them out?
Exactly.
No, this is after the financial crisis, 2008, 2009. These have been the rebuilding years. But what's been interesting, this is way past rebuilding. Now we're in the full-on growth stage, and you're seeing that. I mean, JPMorgan passed their $50 billion in annual profit. That's huge.
Yeah.
And so we're in a different era now.
Even with those capital requirements.
The burdensome capital
Even with
requirements.
those capital requirements.
Yeah.
But again, the capital requirements that they were complaining about were the next phase. So it was going to be even higher. Now, they've been able to handle their capital requirements that they currently have. The question was, will they get worse? And now the expectation, going back to this theme of regulatory burdens, is that they don't expect those capital requirements to be as high as they originally were proposed.
Before you go, because I feel like we should mention Citi, that $20 billion buyback, which is, I feel like they're still going through a transformation, right? And what do we need to know about Citi?
They are. They lowered one of their their expected profits that they have been guiding to. So I know that
tangible common equity, right?
Tangible common equity, the profitability, but I would say that their performance today was positive. I think the stats were 3 of their 4 or 5 business lines were records or higher than expected, and so I think that when there's this question of can Jane Fraser turn around this bank into a growth stage, that's still very much an open question. But we didn't see, for example, the shares react in a super negative way to that profit metric being brought down.
They're up 7%. They're the second best performer in the KBW Bank Index.
Going to be one of your gainers today?
It is.
Okay.
The whole group is.
Okay, all right. When you can't choose one, you choose them all. Kat, before we let you go, give us one highlight from Goldman and one from Wells.
Goldman, I would say it was like the Trump parade. It was a very rah, here we go. We're expecting 2025 to be our year. And that was a lot of what Solomon said. JPMorgan was a lot about their strength in trading and continuing. But there were some questions too about leadership under Diamond and what happens next.
So that was interesting. 5 more years?
I don't think it's going to be 5 more years. And he's basically, he has been saying that, and that was reiterated on today's call. There will be a transition. It's just a matter of what happens. Is that transition a year, 2, 3? It's definitely not 5, but
it's definitely
there's still the question
with some of the news this week in terms of the C-suite over at JPMorgan. Great rundown, great overview. Kat Doherty, she's finance reporter at Bloomberg News. Be sure to check out all of her stuff at Bloomberg.com and on the Bloomberg.